Hi guys and welcome to the channel. So please do me a favor and click on the subscribe button, notification bell, and also give me a thumbs up for the video. It will really help the channel a lot. Thanks. And this video is brought to you by Tiger Brokerage. They support US, Hong Kong market for stock, ETF, option, futures, and margin. And currently they are offering one Apple share and also 60 commission-free trades when you deposit a minimum funding of 2,000 Singapore dollar or US dollar of 1,550 USD. The Tiger Brokerage holds a capital market service license under the Security and Future Act, which is issued by the Monetary Authority of Singapore. Your fund and investment are deposited in segregated trust account and custody account. And for every successful registration and minimum funding meets, we will earn a small commission from Tiger Brokerage. So click on the link in the description and comment below if you are interested to sign up and help up the channel. Thanks. So let's get back to the video. And actually I already recorded this video and uploaded, but somehow after uploading to YouTube and there's no audio. So I have to make this again. And okay, so let's get back to the video. Instead of anticipating for US market Santa rally, somehow we managed to get the Santa coming down the hill. And this month, January of 2022 will be an interesting month indeed. We will be anticipating the CPI data release next week and also the FOMC meeting. FOMC will probably act according with the CPI data. FOMC stands for the Federal Open Market Committee, which basically that means that they are the one who decide the direction of the rate. So be on the lookout on 25th and 26th of January. And that being said, rate hike I think is pretty certain, probably start with 0.25%. And if it is any higher than that, high chances that the market will tumble even harder on that week. Yes, and also including the reducing QE will inflict more pain to the market. So I am expecting more pain throughout this month. And personally, of course, and this is not a financial advice, I would love to scale into favorable position. Like buying an DCA into the ETF and companies which you believe in. And unfortunately, my cash reserve have been dried up. And currently, I am building up my cash. And for those who are same position as me, what I learned from the stock market is that there will always be another chance. So just sit back and ride the right, right, right to the right. Yeah, you get what I mean. So let's get back to the second ETF in my portfolio, which is IGV, iShare Expanded Tech Software ETF. You guys can pause and read the description over here. But basically, in short, this ETF focuses on software sector. And mostly they invest in the US large cap such as Microsoft and Adobe, Salesforce, Oracle, etc. And this company, most of them are heavily promoting subscription-based services. Let's get an example. Microsoft. Okay, Microsoft with their Office 365, is it? I think so. And you can see from here, just by subscription base alone, it contributed to Microsoft overall sales of 168.1 billion in sales. So you can see how profitable is the subscription for the company. And when it comes to software, usually it is much easier to sell. This translates into a higher profit margin. And most of the holding in this ETF, they are offering subscription-based services. Personally, I believe software will be as important as silicon sector in the future, where during the COVID, where people are forced to stay at home, so software companies saw their subscription services subscriber rose significantly. Even though we are kind of getting back to the old normal, I believe that the trend of using software will keep on going up. It might not be as fast as during COVID, but it will be steadily climbing up. So let's now look at their past performance. Personally, I will look at the 5 and 10 years annualized return. And as for this IGV return, for the 5 years annualized, it will be on the high side of 20, 10 years annualized in the low of 20%, which in my book is pretty good. However, bear in mind that past performance does not guarantee future performance. But I like to take it as a guidance on how well the management will lead the ETF in the future. So that's it for today. Let us know if you are interested in this ETF or any other ETF down in the comment below. Uh, Subscribe, like, and share. So see you guys in the next video. See ya.